Hi students, 12th Standard Accountancy, Chapter 3, Exercise Sum number 2. From the following information, prepare capital account of partners Reuben and Terry when their capitals are fixed. Listen here carefully. Reuben's and Terry's informations are given below. From this information, we are going to prepare fixed capital accounts for Reuben and Terry. So, under fixed capital method, each partner maintains two accounts. What are they? There are partners capital account and the second one is partners current account. Let's take partners capital accounts. It is very simple format like similarly ledger account. On the left hand side debit side we have date particulars and partners name. On credit and right hand side credit side we have date particulars and partners respective of the partners name is to be entered here. Okay, then let's take partners capital accounts. The partners initial capital introduced to when business started business is to be entered on credit side, and additional capital introduced during the year is to be recorded on credit side. So according to the capital accounts, whether it is original amount of capital introduced by the partners into the business is and additional capital introduced during the year, what are the capital that respective partners have, it is to be recorded on credit side. The opening capital, that means introduction of the capital, you have to write by balance brought down. This is the opening balance of the capital, and additional capital introduced during the year you have to write by cash account or by bank account. Okay, within the bracket you have to write additional capital introduced. So these two capital will be appears on credit side of the partners capital account. And the third transaction is part capital permanently withdrawn is to be recorded on debit side. You have to write to cash account or to bank account on debit side. So according to partners capital account, there are only two transactions is to be recorded. What are they? Opening capital, additional capital, and capital permanently withdrawn by the partners. These three transactions only recorded in the partners capital account, and partners capital account will always shows on credit balance. Capital accounts will always shows on credit balance. Okay, and then rest of the transactions is to be recorded on partners current account. So the opening balance of the partners current account is to be on either on credited or on debit side. If the opening balance may be either credit balance or debit balance for the partners current account. Okay, then on credit side the transactions is to be recorded on interest on capital, salary, commission. If the partners get profit, it is to be recorded on credit side. So 1 2 3 4 5 transactions only appears on credit side. Let's take debit side. If the partners have opening balance on debit side, you have to write to balance brought down. Okay, current opening balance. Then drawings, interest on drawings. If the partners get loss, it is to be recorded on debit side. If the partners get profit, it is to be recorded on credit side. If the partners get loss, it is to be recorded on debit side. You have to write to profit and loss appropriation account. Within the bracket you have to write share of losses. So only 4 transactions will be appears on debit side. Okay, so according to the format, now we are going to mark the given transactions. Capital on 1st April 2018. This is the opening capital, original amount of the partners introduced when they started the business. Okay, so it will be appears on partners capital account credit side. Capital account will always appears on credit side of the partners capital account. Current account on 1st April 2018. This is the opening balance of the current account. So current account opening balance will appears on current account credit side. They have given here clue credit. So you have to enter it on creditor side. Additional capital introduced. Additional capital, opening capital, both are we have to enter it on partners capital account credit side. Drawings and the interest on drawings both are will be appears on partners current account debit side. Okay, debtor, and interest on drawing current account debtor side. And the share of profit, if the partners get profit, it will be appears on current account credit side. If they get loss, it will be appears on current account debit side. Okay, interest on capital will be appears on current account credit side. Salary will appears on as per the format current account credit side. Commission will be appears on current account credit side. So as per the format we mark the given information. Now we are going to prepare the partners fixed capital, means current partners capital account and partners current account. So you know the format of the partners capital account. Okay, so on credit side you have to write opening balance of the partners current capital account dated on 2018 April 1 by balance brought on, which means original capital introduced when they started the business. Okay, 70,000 50,000 respectively, and additional capital introduced during the year you have to write by bank account 18,000 16,000 respectively. Then they didn't given the capital permanently withdrawn, so we have only 2 transactions for this sum. Okay, so now we have to total it. Ruben's total is 88,000 and Derry's total is 66,000. We have to enter this total on debit and credit side, same horizontal line. Okay, then you have to enter it on. Now we are going to close it. Okay, so to closing balance on debit side 88,000 66,000 entered. The closing period is 2019 March 31. Okay, then next we have to brought it down to the opposite side. First we have to carry down for closing balance. Okay, then that same amount we have to brought it down to the opposite side. Below the total you have to write the same amount. Okay, against this amount you have to write by balance brought on, which means opening balance of the next accounting period, that is 2019 April 1. Okay, so this is the opening balance of the Ruben's. There is opening capital for the next accounting period prepared. Now we are going to prepare the partners capital current account. Okay, the same format we have to write. Then opening balance of the current account we have to write on credit side 2018 April 1 by balance brought down 25,000 15,000 respectively. The partners get profit, so by as per the format we already marked the given information in the question. As per the format we have to enter here. By profit and loss appropriate account 35,000 25,800. Within the bracket you should write share of profit by interest on capital by salary commission entered. On debit side the transaction is to be recorded on debit side is 2 drawings account, 2 interest on drawings. Okay, then you get the total on credit side for Ruben and Derry. The total of the Ruben is 75,500. The total of the Derry is 61,300 rupees. Then you have to enter this total on debit side on same horizontal line. Okay, then you have to enter it, find the closing balance. So for that you have to find out the differences. So for that you have to add the Ruben's amount 10,000 plus 500 10,500. Then you have to subtract it that 10,500 from 75,500. You will get 65,000 differences Ruben, and take Derry 6,000 plus 300 6,300. You have to subtract it that 6,300 from 61,300. You will get the differences is 55,000. So this is the closing balance of the Derry's and Ruben's amount. Okay, then that this closing balance you have to write at the end of the year 31st March 2019. Then you have to brought it down to the opposite side. Below the total you have to enter 65,000 and 55,000. Again this you have to write by balance brought down. The next accounting period is 1st April 2019. So this is the next accounting period's opening balance of Ruben is 65,000 and Derry's amount is 55,000. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.